But macro moves slowly, and people forget this. We get one data point a month, or you might get some weekly data, but economies don't move like markets do. So most of the market moves are noise. You have to filter out that noise, and creating these narratives where you can test a hypothesis are really the best way of doing that. It is to do with this inflation narrative because the super long-term cash flows of growth stocks get discounted by the inflation, so they tend to underperform. They still do okay, but they tend not to do as well, while some of the cheaper value stocks tend to do better on their cash flows, etc. Now, growth massively is outperforming value, and I don't think that changes. It's something I've called the exponential age. And you'll see an amazing interview coming up on Real Vision about it, which I'm not going to leak because somebody will kill me, about this. And the exponential age is where we are entering into a period of unprecedented technological advancement, of all sorts of innovations that are not at nascent phase, but in adoption phase, where Metcalfe's law becomes the pricing model and their prices go up exponentially. Given any weak growth environment, that happens. Any benign growth environment, that happens. Only in the inflationary environment does that slow that narrative. But over time, I think we're going to see this exponential age play out, and I really want to capture this. Basically, I have for a long time been talking about we can tokenize everything conceptually. NFTs were the breakthrough. That was the token that you can tokenize anything on. Mark Cahodis has talked about it using the T0 platform, but there's a number of platforms doing this. And what does this all mean? It basically means the breakthrough has been made to attach intellectual property or physical assets or digital assets to a blockchain in a method that is transferable instantaneously to anybody and storable and proven in its store. So using that, you can limit scarcity and also imply smart contracts. So the multiple uses of this are almost, we can't think them through. It'll change everything from the insurance business to the real estate business. It'll probably change everything from how we notarize things to the art world, to the music world, to how businesses are built using community tokens, which are basically a variation of NFTs. 5 or 6 mega trends all converging around NFTs, and this is just the early stage. This is going to really break everything. I think the securities market will be attached to tokens, NFTs. I think we will find, all financial instruments will go that way, because why? We can settle instantaneously, we can trade 24 hours a day, and it doesn't cost anything to do it.
Right.
So why the hell would you not? I mean, Sam Bankman-Fried's already doing this with FTX by tokenizing some equities. Yeah. We will see the tokenization of the asset management industry. That's all coming too. And it massively reduces the cost. Anybody who's ever set up a fund knows how painful it is. So this is changing, and there are whole platforms building these kind of businesses out. And this is not me pontificating on a Friday afternoon. This is me saying, I'm talking to all of these people, and this is all happening. And I'm involved personally in a whole ton of this stuff, because it is incredibly exciting. I think people still think that DeFi was the big breakthrough. I'm a bit of a yawn on DeFi. It's like, yeah, great, yield. I don't care about yield. Price appreciation in a network model is worth more than the yield. When I look at NFTs, that's when I get really excited. And again, I'm not talking about collectibles. I'm not really interested in that market. Other people are, and it's very interesting, but it's not for me. What I'm interested in is, I think, a disruption of global business models, supply chains, and all of the things that can come with NFTs, and a change in the entire financial system that could be attached to this technology. Just think about the complexities of the global derivative market. All of those are smart contracts that come on these big ISDA docs that are that thick.
Right.
And it's so difficult for the system to clear all of this stuff and know who owns the stuff, because I write a swap contract with you and then you use that as the collateral for another one, and then somebody builds an option contract using the same collateral. It's so complicated.
Yeah.
This changes derivatives forever because each can have a unique NFT. And so therefore we can trade it and we know who owns it and what cash flows are built off it in terms of other smart contracts. So it just makes the world more functional.
Yeah.
It functions in a way that really aligns itself with the digital age we're now living in, where I expect to click on my Slack or Zoom and get you in 3 seconds and watch you via video. Well, the money system doesn't work like that, nor does the value system, nor does basically the entire world's contractual systems.
Right.
Be it stuff like insurance. All of that changes. And this is one of the things that I observed about the blow up in crypto, the 50% drop, and then some of these DeFi protocols fell 90% short periods of time. There was wiped out tons of value out of that market and nothing happened. Why? Because everybody's over collateralized.
Right.
Everybody knows who owns what. Yeah, there's projects that don't work and there's scams, same as there are in equities and startups and every other aspect of life. But there's a robustness that is there. Doesn't mean things won't blow up because people design bad business models, people don't get it right. But that space has robustness and people need to pay attention because that's extraordinary. Humans are weird, right? It's behavioral. I want to buy it because it's down 50% to, oh my God, it's down 50%, I need to sell it. And the buyers meet the sellers. It's kind of, that's what we are. I mean, I use technical analysis because it's the behavior of crowds. And Fibonacci ratios, they work too. 50% is a Fibonacci number. So all of this stuff kind of works. I don't know whether the crypto market has another leg lower before it recovers. That's Tom DeMark's thinking that I've been talking to. He thinks there's another sharp sell-off. My personal view is I don't think there is, but who am I to question Tom? He's pretty good at this stuff. But it all matters. What matters is your time horizon. If your time horizon is 5 years and you're expecting a 10x or 20x, then a 50% pullback is well within a one standard deviation normality. And once you understand that, you stop fretting about all of this stuff. My actual hunch is no, because as leverage keeps building, it pushes bond yields down because rates can't go up as much. So it changes the natural order. Technology is hugely deflationary and it's only accelerating. So are we going to go through a time where we get total financial repression, where bond yields stay negative for an extended period? Possibly. And not in real terms, in nominal terms too. And I think we've seen that many times in the past when you go back long enough in time. There are whole periods of time you can do this. So no, I'm not entirely sure with the structure of global society, technology, globalization, and the debt burden that this can change. So unless they manage to completely devalue the purchasing power of fiat currency to such an extent that you've basically eradicated the debt, then could you see a normalization? Possibly, but how are you going to generate long-term inflation with this secular setup? So I don't see it, but could be wrong.